Phillip Streible, Senior Analyst, Blue Line Futures. Good morning, Phil, and thank you so much for joining us.
Yeah, thanks for having me.
Phil, we just saw the jobs report, the non-farm payrolls, better than expected once again. Do you believe this is going to be the game changer today for the markets? Because also we do see futures, very interesting trading, by the way, when it comes to the US futures, actually clawing back some early losses.
Yeah, it looks like we're going to have a two-sided trading affair. I mean, the first and foremost was that jobs number. A lot of people were anticipating a better number. I mean, we're coming from basically the bottom and trying to work our way up. So year over year change, obviously the jobs picture in the U.S. is a complete disaster. However, we are starting to have some bit of recovery in there. But a lot of people are focused on now that comes into the mix or into the equation as far as how much money is this next stimulus package going to give to the U.S. citizens?
Absolutely. How important is this stimulus package, or we can also call it relief package, call it as you wish, but how important is it for investors? Because what we heard from Nancy Pelosi, the White House speaker, yesterday, she said that the two parts are still very, very far away from any chance of, second package.
Yeah, I think it's going to it's a difficult road, and they're really like politicizing this package. The situation is that the Republicans want to pass this package right away. They just want to get money into the hands of citizens, continue to try and recover and grow the economy, reopen the economy, where it seems like the Democrats, they want to keep the economy in a recessionary state and mostly locked down coming into the election to try and sway the outcome. It's very tragic that it's become politicized like this.
Certainly, Phil, I just want to take a look at commodities. It's extremely interesting what is going on over there. In particular, I want to talk about the gold. Actually, I'd like to kick off with the gold. So far, 2/10 of 1% lower, but $2,060. This is major record, major achievement. How far can we go with the gold? Because at the same time, we do also see markets rally, equity markets rally, and at the same time, bond markets rally.
Yeah, so this is completely like an inflation play. So they've essentially doubled the money supply measured by M2 over the past 6 months. Gold is starting to rally because of the expectations that all this loose money out there is going to cause inflation. We're already seeing inflation in food prices, and then also in some of the energy prices and medical prices as well. So inflation is taking underway. People are looking at a store of value, and if you look at the U.S. equity markets, the valuations are so high on just a handful of companies that people are looking anywhere to try and jump in on an asset class that's going to move up, and that's why gold and silver are both moving up aggressively.
In fact, what about a silver? Because we saw, actually we're seeing a little bit of slowdown of the major rally, but still $28 an ounce, which is great.
Yeah, it's been quite incredible because silver is like looked at as the poor man's gold. People are coming in there. It's able to be afforded by more people, and silver has that 80% industrial view. So, and that's where the first part of the economy that's taken off is these industrial jobs are starting to come back. For every one industrial job, it generally creates about 7 regular jobs in order to install whatever that part is. Silver's a major component of the industrial, sector. So that's why silver prices have gone basically parabolic. And I do expect it to have some kind of correction here because of the inverse correlation of the dollar, and the dollar is finally getting a small relief rally.
Do you see any correlation between the gold's rally and the Bitcoin rally?
Oh, yeah, definitely. I mean, the mentality of the people that tend to invest in, gold and silver, safe haven assets, it seems like in their portfolio, many people do buy Bitcoin. I think with Bitcoin finally holding above 10,000, breaking into the 11,000 range, I think that will be that old resistance at 10,000, new support level. I definitely think that people are going to continue to add Bitcoin and other alt currencies.
Let me ask you, in terms of commodities, what do you think about the copper today? It's off by 1.25 at a 2.86 mark. So what's next for the copper? And of course, how important are the dynamics in China?
So yeah, copper prices, they were actually one of the first commodities that took off. They were one of the first commodities to be absolutely hit. Copper prices went down to $2. They shot up. They almost hit $3. The rally is kind of stalled there. If you look at some of the like the LME stocks and stocks in Shanghai, some of them have dwindled down quite a bit. But I think that copper prices are kind of holding at this elevated level because of the fact that you're going to have disruptions in mining. You're going to have social distancing. Production output is going to be lower. I was really surprised that copper hadn't extended the rally. So it kind of tells me that, they might have achieved what they're trying to do as far as building stocks at the moment here. Now they're going out after other metals.
I just want to have a very quick look also at the crude oil price, stuck over there at $41 per barrel for quite a long some time. 0.3% lower. The Brent as well, 0.4% lower at $44. Are these the levels that we're going to see regarding the futures in the near to long term?
So I'm slightly bearish, and I've been playing the downside of crude oil since it had this stalled rally. I used the breakout to get short. I'm playing it on a fundamental basis that I think that the demand for driving in like the consumption there's no airline consumption, there's no cruise ship consumption. Driving has come to a standstill. Some of these states are actually implementing like roadblock type situations to try and figure out where people came from and then to put them into quarantine. So I think that the driving demand's not going to be there. From an inflation standpoint, that's what's holding crude oil up at the moment. But I think OPEC is going to increase their output. And ultimately, I think we're not going to go down too deep. I think we're going to go to like $38 to $35 range. That's where I'd be a new buyer again.
Phil, let me ask you one last question. If we just have a look at the S&P 500, I was saying that it's 1% away from its all-time record highs. What do you expect in terms of technical basis from today's trading session? Do you think we're going to hit these all-time record highs?
We could. I mean, it depends if it goes up into a melt-up rally like what we saw yesterday, or if people digesting the number. Really, I think it's going to be like a two-sided trading. It's quite volatile. And like I said, only a handful of companies are actually supporting the entire thing. If you look at like airlines, cruise ships, some of the restaurants, some of the casino stocks, hotels, those are not in bull markets at all. They're actually selling off. They're coming down. So, it's just the technology sector and consumer discretionary that's holding up. So be long those, be tactical about your trading, buy technology, buy consumer discretionary, but sell financials against it, sell some of these other assets against it.
All right, what about the energy sector? We did see the USO yesterday off almost 0.2%, and right now flat, but above the flat line in pre-market trading.
Yeah, I'm not too bullish on like energies at all. I think that they've rebalanced and they've come up quite a bit, but I really think that people should book some of their profits on there, especially at the higher end of the range. Be patient, wait to buy those pullbacks.
All right, thank you very much. Phillip Streible, Senior Analyst, Blue Line Futures. Thank you for joining us. Have a great weekend ahead.
You too, have a great weekend.